Recent economic data continues to support the view that the U.S. economy remains more resilient than consensus expectations suggest. I'm Michael Drozd, CIO for LaSalle Street. Stay tuned to learn why persistent concerns over tariffs and global trade tensions and their economic impacts may be overstated and reinforce a lower probability of a recession than most are anticipating. Consumer spending on goods for the month of June, which accounts for roughly 1/3 of the personal consumption expenditures data and 1/5 of GDP, also exceeded expectations. While headline spending slowed to its lowest since January 2024, core spending remained positive at 2.3%, still well above contractionary levels. Manufacturing activity, which represents about 10% of GDP and 14% of non-farm payrolls, also surprised to the upside. Industrial production accelerated to a two-month high, while capacity utilization rose to above 75%, its highest level in 3 months. Notably, energy production, a key focus for the current administration, jumped to a 6.8% growth rate, its strongest rate in 4 months. And despite ongoing tariff concerns, Wall Street consensus may be overstating the actual impacts from tariffs on the U.S. economy. Imports account for just 11% of U.S. GDP, and both jobless claims and the unemployment rate remain historically low, further supporting a strong labor market in the U.S., and thus making asset allocation decisions based on trade headlines unwise. And over the past quarter, financial conditions have eased, helping markets rebound from the volatility we experienced early in the year. A weaker US dollar, lower commodity prices, and range-bound yields have all contributed to improved market performance. And with the recent passage of the One Big Beautiful Bill, equity markets are well positioned to continue climbing the proverbial wall of worry through the second half of the year, likely with some bumps along the way. In conclusion, we continue to view the broader macro and market landscape through the lens of fiscal dominance. While political noise, including sharp rhetoric toward the Federal Reserve and tariff implementation, may dominate the headlines, we encourage investors to focus on their long-term investment goals, as sustained deficit monetization and financial repression become the long-term structural outcomes. Thank you for watching A View from the Street. Be sure to tune in to our next episode. Thanks again.